Ladies and gentlemen, welcome to Kings and Queen Accounting class. Today we are now going to be looking at understanding the basic concepts of accounting. First of all, we want to start by clarifying what is it that we're going to be doing in dealing with the concept, understanding the basic concept of accounting. We have some objectives that we would like to accomplish. One is to understand the concepts, two, to explain the concept, and three, to apply the concept using exercises. So let's start with number one. Number one, we want to identify the concept. So we have them over here. Some basic concept in accounting is one, assets, liabilities, capital are also called equity, income also called revenues, and expenses. So let's get into the matter now. So now that we have identified these five basic elements, what are assets? Assets are resources that are used in the business. They are resources that are used to support the operation of the business. So assets are prime concept or item in accounting. Secondly, liabilities. What are liabilities? Liabilities are those resources that the business has obtained and are owing for them. Right? So that we refer to as liabilities, resources that the business owes. And then capital. Capital now refers to, or equity is also called equity. And there's another term that we want to use. It's called net worth. So you can refer to it as capital or equity or net worth. And basically what that means, what capital is, or what the concept is that the resources that are placed in the business by the owner. Resources that are placed in the business by the owner. Alright? So that's capital or equity, or it is also called net worth. Now, another concept that we must come to understand is income or revenue. Now, what is income? When a person gets into business and starts to operate, the intention is to earn an income, sufficient income that will take care of their needs. So income is really what the business has incurred, or what returns they have received as a result of providing goods and services to the consumer or the customer. And then expenses now would have been, the expense relates to the cost that is incurred in carrying out the operation of the business. Alright, so those are the five simple concepts that must be understood. Assets, those are those things that are owned in the business, or the business owns. Liability has to do with resources that are owed. And capital or equity or net worth refers to what we call resources that are placed or supplied into the business by the owner. I want to point out as well that when we refer to capital, it can either be the owner can introduce into the business assets or cash, right, or any monetary instrument that will be used to operate the business. All right, so we have looked at the first concept, that is identifying the concept, explaining the concept, and I think we have tried to do that. Now we're going to apply the concept. Just so, in applying the concept, one very important equation in accounting, a matter of fact, it is that main concept or equation that all the operation in accounting is subsumed into. In other words, it is the foundation from which accounting is based, and that is referred to as our accounting equation. Accounting equation. And what is this now? This is accounting equation is assets is equal to capital minus our liabilities. So, capital asset is equal to capital plus liability. I beg your pardon. Asset is equal to capital plus liability. Alright, so what that is saying that all of the supportive resources that was put into the business and the asset must equal to the evidence of the asset that is in the business. Alright, so that is asset is equal to capital plus liability. Now, asset, as we said earlier, has to do with the resources that the business owns. Now, there are at least two main types of assets. We refer to one is our fixed asset, and two, our current asset. So, we have fixed asset and current assets. Alright? Now, what is meant by fixed assets? These are assets that are bought and placed in the business to be used in the day-to-day operation of the business. And therefore, they will be in the business for some time. That's why they're referred to as fixed asset. There are others who refer to this fixed asset as non-current assets. Nothing is wrong with that. Non-current asset or fixed asset. And we refer to it as fixed asset because it has some level of permanence in the business. It will be staying in the business for some time. Alright? And then current assets is also referred to as liquid asset. Right? It's also called liquid asset. Current asset is also called liquid asset. And what that means is those assets that will be can be turned into cash within a year time. Right? That's why we say it is current assets. Asset that can be translated into cash within a year time. So these are two main types of asset: fixed assets and current assets. Alright, let's move on a little bit further, and I'm going to go to look at liabilities now. Liabilities. Now, liabilities can be one, long-term liability, and two, current liabilities. All right? Now, long-term liabilities refer to those liability that the business has more than 1 year. Business has more than 1 year to repay. So it is referred to as long-term. Any debt that the business owe and they have received the privilege to pay for it over a year, they have over a year to pay for it, is referred to as long-term liability. Current liability speaks to now liability that will fall due within a year. In other words, all of those persons who the business owe, the business must pay them within a year. So they're referred to as current liabilities. Now, we're going to go quickly to look at, so we had spoken earlier about assets. And we say we have fixed assets And these fixed assets, I'm going to give you a few lists now. So land land and building is referred to as a fixed asset. If the business has any machine, referred to as a fixed asset. If the business has any motor vehicle, if the business have any furniture, the business have any equipment, right? And so these are tools. All of these are types of fixed assets. And then current assets. When we speak to current assets, now we're referring to our inventory. And sometimes referred to as stock of goods. And secondly, we have our trade debtors. And trade debtors is also referred to as our accounts receivables. And of course, we also have cash at bank. So cash at the bank. And we have cash in hand or at the business. These are some types of current assets. All right? I'm going to go to long-term liability. And so one, we refer to it as mortgage. Two, debenture, right? And three, loans over 1 year. Any loan over a year. These are examples of long-term liability. So when a person buys a home, buys land, they buy it by taking out a mortgage. And so the mortgage, they may have 20 years, or they may have 10 years, 30 years to pay it back. Debenture is a certificate of loan that an individual invests in a company. You invest in a company for a long period of time, maybe over 5 to 10 or 15 years, right? Loans over a year, that means any other loan that you have over a year, all right, that you will expect it to pay. All right, so we have looked at fixed assets, land and building, machine, motor vehicles, furniture, equipment, tools. We have current assets such as inventory, or we refer to it as stock of goods, trade debtors, or accounts receivables, cash at bank, cash in hand, right? There is one other, but later you'll learn about it, which is referred to as expense debtor, an expense debtor or prepayment. We'll talk about that later. Of course, long-term liability, mortgage, debenture, and any other loan that your business is required to pay over a year, a return payment over a year. All right, so we're going to go to current liabilities. So let's do it here. Current liabilities, and we talk about now our trade creditors, right? And they're also referred to as our accounts payable. And then we have Yes, bank overdraft if for any reason. And we also have any loan under 1 year. These are basic. There are a couple other current liabilities, but basically later you'll know about them. All right. So current liabilities, current assets, fixed assets, long-term liabilities. All right. Now we're going to do an application. Let's go to objective 3, applying the concepts. So we're going to do that now. So come with me. Let us say we have motor van. All right, one moment. Let's give the instruction. Identify the items and place them in their respective groups. All right. So that these are the items. Let's say motor van. That's one item. Let's say we have creditors. Let's say we also have debtors. And we have bank overdraft. And we have let's say we also have cash in hand, and we have computer, and we're going to put them in groups. So we have group 1, assets, fixed assets. Group 2, current asset. Group 3, current liabilities. All right. So now what are those? Where should these items go? Which of these group headings should they be? All right. So let's start with motor van. Motor van is a fixed asset. Motor van is a fixed asset. So we're going to put it here. Creditors. What is creditor? Is it a fixed asset? A current asset? Current liability? No. Current liability. Very good. Current liability. So we'll put it here. Creditors. Debtors. Debtors is current asset. Very good. Bank overdraft. Bank overdraft is current liability. And then cash in hand, where do we put cash? Cash in hand is current asset, so we put it here. And then we have computer. Where would we put computer? It is a fixed asset, so we put it right here. Okay, so there you go. So we have correctly applied our knowledge in relation to the fixed assets by put them in their respective groups. We have one other activity to close this lesson. to apply one other activity. And let's get on with it now quickly. All right, we're going to be looking at the accounting equation. The accounting equation. What did we say was the formula again? The formula is asset is equal to capital plus liabilities. So, if our total let's go to the exercise now. If assets is equal to $90,000 and liability is equal $55,000. Now, what is the capital? And how do we do that? We're going to learn how to convert the formula. So let's restate the formula. It is asset is equal to capital. Always continue to rewrite it so you remember it. Equal to liabilities. So asset is equal to capital plus liability. What do we want to find? The capital. So we are going to do what is called some substitution. This is the formula. Asset is equal to capital plus liability. We are going to be doing what is called transposition. We're going to transpose the formula to be able to find capital. So it is, what we're going to do is we're going to put the known together and the unknown on the one side. So we know asset, so it's going to be asset. We know the figure for asset, and we know liability. So we're going to move liability from this side and bring it over to the other side. And so this is a plus sign. When it goes over here, it's going to be subtracted. So it's going to be asset minus liability. Let's go that again. We know this, and we're going to put all the known items on one side of the equation. We know asset and we know the liability. So we're going to put them on one side. So we record assets. We're going to move the liability and put it over the other side of the equation. Because this is a plus or a positive, when it goes over the other side, it becomes a minus. So it is asset minus liability. What is left now? Capital. So equal capital. Are you with me so far? Very good. So let's go now. We can plug in the values. What do we have? Asset is 90,000 minus liability, which is 55,000, is equal to. So it means that when we subtract 55,000 from 90,000, we are going to get what now? 35,000. So the liability is 35,000. Ladies and gentlemen, thank you very much for sharing and participating in our Kings and Queens accounting class. The best of the best. And we seek to make the class simple, make the concept simple so that you can understand it. And so the topic we're dealing with today is understanding the basic concepts of accounting. I hope that you have learned something today, and I see you when we come back with our other class. Of course, if you like this video, please click below and subscribe. Thank you very much. Like this video and subscribe. Thank you very much.